This is going to be a stock analysis update for SOFTCAT. I've set some hard stop losses for many of my stocks as I had a look at my overall portfolio and things that I might be wanting to get rid of. And SOFTCAT are currently dancing above the stop loss I've got for them. So I thought it would be good to have a good look at them since my last video, which was in January. Before I continue, please remember that I'm only doing these videos as a hobby and everyone's situation is different, and you should always consult a financial advisor before making any investment decisions. So I first bought SOFTCAT back in 2020, and I've done a number of very detailed videos on them, which you should check out if you're interested. This is going to be just a brief stock analysis update, and actually there's only been two bits of news since I did my last video, which was their interim report and their Q3 trading update. Since I bought them, they had actually doubled in price, and in the video I did back in January, I noted how the actual sector had been in decline and SOFTCAT seemed to be caught up in that. But let's look at this new information to see if that can help us explain anything other than the sector trend. So in their half-year report, they announced a period of profit growth ahead of expectations and strong cash generation. Their revenue was up 33% and operating profit up 12%. They announced strong growth across all income and profit measures and said that their operating profit was well ahead of expectations. You can see that across all of their business segments, they had strong revenue growth, with hardware performing the best at 56% in that category. And you see that their profit for the period was up to 52 million, making it look highly likely they're going to break the 100 million barrier for their full year 22. And their cash has grown from the previous half at 74 million. So they have 74 million in the bank now and still no debt. So after that report came out, the share price did actually respond to that quite favourably, but only for a short period of time before the terminal decline continued. And then in the Q3 trading update, they say that the companies continue to perform well through the period and delivered double-digit year-on-year growth in revenue, gross profit, and operating profit. And they announced that operating profit for the full year will be slightly ahead of its previous expectations. You'll know from looking at my other videos that this is an extremely solid company. We can see their previous history is immaculate, and all of these news releases to show a continuation of this excellent trend of profitability. And this is a company with no debt, so I just love that. You can see here their net income history just continually improving, with the gap between their income and expenditure widening ever further. So the question is, why is it that despite this excellent performance of the company, and we know that it's a solid company from all the detail I looked at it, which is in the other videos, why is it that despite it being such an excellent company, the share price has just continued to decline? And of course, the answer for that lies within the software and computer services sector. If I zoom in, we see that from around September of 2021, this sector as a whole has been in terminal decline. And that corresponds perfectly with the fall in the share price for SOFTCAT. This sector was actually part of the dot-com bubble, and you can see that that burst around the year 2000. And then after consolidation over a long period of time, it was then roaring away since around 2009. And then it's entered this choppy period. And around the time I did the computer center video, I noticed this asymmetric triangle here, which it seemed to be forming in. And it seems now that we've broken below that, with in fact the bottom of that triangle now forming resistance before the sector as a whole does seem to be on its way down. When I look at this data set that I've put together, we see how the market cap really had actually run away in terms of its price to earnings and price to book ratio, as money was flowing into this sector, as you can see here from the sector chart over that same time period. And now all the asset managers and money managers, now they're taking money out of this sector, and you can see that sector fall. And then so in my data here, you can see the market cap drop as the money sucked out of this sector and sucked out of SOFTCAT. So the sector trend for me explains why the share price of SOFTCAT has been falling, despite it continually bringing out amazing results and also being a solid company. So I'm quite happy to sell if this stop loss gets hit. I will definitely go on my watch list, because once that sector trend ends and I can see that the company's still performing very well, then I'd be very interested in buying them again once the market cap drops down more to a more historically normal level. So I calculated that including dividends, I got a 25% return on this company. So I'll take that. I could have actually got a 100% return had I sold it all at the top. But of course, who's any good at guessing tops? I think the most valuable thing, though, about my experience investing with SOFTCAT is what I've learned about the importance of sectors when picking particular stocks. So I hope you've enjoyed this video, and good luck with your own investment story. Please read the disclaimer and remember that prices can go down as well as up.